what do you think of when you see this chart? I'll tell you what I think of and more coming up next on the Short Vol Show Live.
You're watching Famous Dave on YouTube.
So when we look at this chart, what I see when I look at this, I think of this as being just a very, very, very flat curve. So the scale, it automatically sets the scale of this. But when I think of this, if we switch this to narrow, that's kind of what I think of, that it's just very flat. If you look at the numbers on the bottom, contango is less than 1%. All of these numbers, until you get out to number 5 here, are less than 1%. So this is just a really flat curve that it looks accentuated because it auto scales it here. But if you look at the axis here, you can see it's only a 0.25 wide all the way from top to bottom. So essentially what that means is that the VIX term structure is not really affecting stuff at all right now. It's very flat. And that is representative of a VIX in transition here, as it is still being affected by the continuing down moves we've had. Let's take a look at the state of the market in general right now. If we go to the E-minis chart here, which to me is representative of the market, and what's that, a month chart? Let's go to a year chart. You can see we've been in the downtrend since the beginning of the year, right? That's nothing new. Let's get rid of this study here. So we're off the lows, but we're still kind of in a downtrend, and that's kind of the news. Now, the term structure is kind of flat because depending on how far out you went on this chart, we could be in a little up move here. We're off the lows, right? So it's kind of in transition. If we did have an up day or two, the term structure would right itself where we would have an upward sloping curve, which is the normal state of affairs. So if you just look at this chart up until October, the whole term structure would right itself like that over time. Because of the fact that a lot of these products have a situation where the futures are rolling out, the term structure tends to right itself to a upward slope like that. And it kind of makes sense intuitively. If you think about it, given more time, more things can likely happen with volatility, right? If you've got one day to work with, then the VIX could go up a little bit. It could go up, down a little bit. It could do a lot of things. But if you have 2 days, there's twice as much time for it to make some big move, either up or down. You've got months. There's months more time compared with a day for stuff to move around. And thus, it kind of makes sense to have an upwardly sloping curve. You can see here, the front month future expires in 20 days. That means that we are about a little over a quarter into there's a 30-day cycle. So we are a week and a day into the 30-day cycle. I'm sorry, into 28 days in 4 weeks. But this currently has a 30-day cycle, and so this future is certainly very relevant right now, as it makes up the majority of these products. Remember, as the days go by, if this has 20 days till expiration and there's a 30-day cycle, the composition of UVXY or VXX or UVIX is made up 20 over 30, 2/3 of this front month future and 1/3 of the second month future. So this front month future is still very relevant here, and could be this is considered inverted in that the front month future is in a lower place than the VIX spot price. Now, over time, the VIX spot is going to move below all the futures. That's the normal state of affairs. And indeed, if we took a snapshot of this term structure over time, we would see this future moving down towards, the spot. You could either say the spot moving down or the future moving up. But in relation to each other over time, they are going to go back into the quote-unquote normal state of affairs where the spot VIX price is lower than all the futures. And if you watch this over time, you would see that happening when there's a down day or some sort of violent activity. Things move away from being in the normal, but as this market kind of comes back or starts to rally or decelerates to the downside, a normal state of affairs comes back into being, which is the futures being in contango, thus the front month future being lower than the second month, which is right now normal. What's not normal is that the spot VIX price is higher than the front month future. So we're still not totally back to normal. And once again, the overall impression of this chart is that it's very flat, although it's auto scaling to make it look a little bit more dramatic than it actually is. All right, let's move on. Now, my idea about how to make money in this marketplace is since we're well off the highs, is to try to come up with some stock and buy calls in that stock, or put on some sort of bullish strategy so that as the market recovers, we can participate. And by using some sort of strategy that is going to perform better than just buying shares of the stock for whatever amount of money we have available to us. It could be $10 million. It could be $10 would be hard, but it could be $1,000, $1 million, $500. Options are good for leverage, and thus that's my idea. Currently, I've been pursuing this idea in the stock Square. So if I get out of the way for a second, we can look at Square. Like many stocks, this one is off the lows a bit. If we back up the chart to 180 days, you can see recent low of just under 56, but we're still in a downtrend, right? So until we kind of break this trend, this could go lower than 56, right? However, if we look back through time, we can see that this company has been making money. They have positive earnings. If we look back to the last few earnings, we see 18 cents, 27, 37, and so forth. It did have less earnings last time than the time before, and less earnings the time before than the time before that, etc., back until the beginning of last year. However, it is a company that's making money, which is, I think, important. I definitely believe in some of what I would call the Warren Buffett theory of things, in that you want to find companies that actually make something, that employ people, and that are profitable. Now, companies that don't make something, aren't profitable, and don't employ people still go up. However, it seems like a better kind of bet if you are dealing with a company that actually makes money, is profitable, etc. Now, some company like Amazon for years was not profitable, but they were expanding rapidly, and they had great future prospects. But for the moment, we're looking at Square. Then the thought process here is that this company will come back as the market comes back, and can get back to some sort of level higher than it is now. Look, it came all the way from 289. Now, could it go through 289? Of course it could. It doesn't seem likely to do that for some time. If ever is a long time, so I don't like to use absolutes, but it seems like it's a long way from that. But could it get back to 80 or 100? Seems more reasonable. Other stocks to look at. Let's take a look at perennial favorite Tesla. Now we can see that Tesla, even though it is off the look at this. Came from 1,243 down to 700, so way off the highs. Could it go lower? Of course it could. Could it go higher? Of course it could. Very hard to get a read on this one. The one we've been playing with a lot, GameStop. Once again, this is a strange chart to look at in that level there. But let's look at it this way. I was playing this to the short side for a long time. I, fortunately for me, laid off of shorting it because it has come pretty well off the lows. It keeps bouncing off this 100 level here. Still not a huge fan of this company. Losing money. Doesn't seem to have too much of a plan for the future. People's enthusiasm over NFTs and such things has really dwindled over the last few months. And thus not a great buyer of this one. But the strategy that I'm talking about is to find some stock that you think does have good prospects and to jump on board in one way or another, whether that be to buy shares, to buy calls, to buy call spreads, calendars, verticals, sell put spreads, sell puts, this sort of thing. One that immediately comes to mind would be Apple. If we look at Apple, however, not that far off the all-time highs. Still off the all-time highs, but not that far. An example of a stock that's really come off its highs a lot, Netflix. Boom, right? Now this one got back to 200. Could this miraculously get back to 400? Certainly could. Will it? I don't know. There's a lot of competition in this industry. A lot of these stocks are bundled in ETFs where they're going to go up if the market goes up, regardless of their prospects, just because they're so integrated into all these ETFs. And that's been kind of a problem of ETFs in that it lumps together the good with the bad a lot of times. I was looking at maybe buying ARK K, but some of these companies I really am not enthusiastic about, like Coinbase. I have no interest in owning Coinbase. Let's take a look at that one for a sec. A little off the lows, but once I found out that if you park your money here and they go bankrupt, they could just take your money. Doesn't sound like a good place to park your money. The low is 40 and change. It's now 50. Certainly it could bounce off the lows, but its prospects to like explode to the upside moving forward seem fairly limited. Now there's thousands of stocks out there. I'm sure you can identify one that's a good candidate to move higher from this area. If you do a little research, which is what I recommend you do. I don't recommend people follow my strategies. I just want to provide an example of execution and give you some ideas. But the only way you're going to be successful is to develop your own strategies and ideas and to execute them. Just having me around might make you feel like you're less alone out there in the world of trading. Trading can be a lonely thing, though, because let's say you're very successful and you double your money. Nobody really wants to hear that, right? You come and tell people, oh, I bought a brokerage account, I doubled my money. People aren't going to be that excited for you as you might think. If you lose money, people are going to ridicule you and say you're a gambler. So it's kind of a lonely activity to participate in at times. So that's kind of where we are. I appreciate you coming in and checking in with me. This square position hasn't been working very well for me as of yesterday. If we look here at the activity over the last 5 days, it really has. Yesterday it went from 70 to 64. Not a great day to be long this one. The current bottom, what did we say, was 57? something like that. Let's see. Sorry, 56. But I'm looking for this to get back to like 80, and I think it can do it. I think this company still has good prospects. Essentially, Square makes sort of cash registers, automated cash register type applications, and other things as well. They are involved with crypto, which makes me a little bit nervous. I'm nervous around crypto. However, I believe that the market recovers, which is a big if. It will recover at some point. We just don't know when. This will participate in the recovery. So we'll see how this works out for us. In the meantime, I appreciate you coming and checking in with me. And, you're not alone out there trading. There's all kinds of groups to hang out in, StockTwits. There's a Facebook options group that I'm part of. There's a volatility group that I'm a part of. Social media has proven to be a difficult aspect of trading in that a lot of people have become lemmings to this get long and hold, pump and dump cryptocurrency type of evangelism where pick a name of a product and people all band together and support this product no matter what, and you're going to go down with the ship, and you're going to name your kids after it, and you're going to pledge to go down with the ship. Now, pledging to go down with the ship seems a little silly to me. It seems like you should work with something while it's working in your favor, and then if things start going bad, to reevaluate. That's part of trading, and that's the part that a lot of these social media-backed new groups really haven't caught on to yet, that you don't necessarily want to go down with a ship. You don't want to be the one who lost the most money and brag about that, right? You want to be successful. And if that involves changing your strategy when you got it wrong, then so be it. It's not about pride here. It's about being successful. And that means many times being wrong and changing your strategy. Anybody who trades for a significant amount of time is going to be wrong many times. And making that adjustment, recognizing when a situation has changed, can be a difficult thing, but is going to be important to be able to do. So before you fall in love with one particular product and decide that that's going to be the product for you forever, there's no need to make that sort of commitment. Better to be a little bit more flexible. Now, it's a balancing act between being skittish and not really being able to commit to anything. Certainly, you could be long a stock and it could go against you for a day or 10 days and then right itself and go your way. Or it could go your way for 10 days and then turn around. So it's developing the ability to be patient at times, but be willing to bail if things just totally don't work out. And to at least admit to yourself that you're wrong. You don't have to go on social media and tell everyone that you don't know what you're doing, or you're an idiot, or things didn't work out. But you need to admit to yourself when things are going badly and stop, get out of something before it ruins you, right? If you buy a crypto or any sort of thing you buy for 40, if it goes to 20, it's probably time to get out and move on. Just letting it drag you down to zero is going to be something that you're only going to do once in your career, and then after that, you're going to become more wise to it. But I'd prefer to save you the agony of having to watch some investment go to zero and just learn to get out at some point. Have a plan for, well, I think this is going to happen, but if it doesn't, and if I'm wrong, this is where I'm going to get out, and stick to that. It's called discipline. It's hard, but it's something that you have to learn how to develop to be a successful trader. All right, well, thanks for checking in with me today, and I will see you in the next one. do all that YouTube stuff, like, subscribe. I'm trying to get to having a few more views per video as this channel comes back to life, and I appreciate you sharing or clicking the like button or leaving a comment. Thanks for doing that, and I'll see you next time. Bye.
You're watching Famous Dave.